Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I appreciate you guys joining me this morning. So what we're going to do today is we're going to talk about the S&P 500 and the NASDAQ 100 from the perspective of the futures and what they might do next, how we might be able to find some trade opportunities, and what those might be. Okay. First and foremost, I just want to mention that as of now, the market is set to open with a gap up. A gap up is always bullish because it is a sign that we are starting the day with momentum up. And what we look for is the market to either try to fill the gap, and it can't. It just turns around and keeps going. That's the most bullish scenario. It fills the gap and then finds support relatively quickly within yesterday's range, and then turns around and starts going higher. That also is very bullish. And only really if we fill the gap and then we can't get out of yesterday's range. We start to spend time, we start to bring in volume, we start to stay inside yesterday's range. Does it really kind of start to get bearish for a pullback? Okay. So if I was looking to short the market first thing in the morning, I would be targeting a gap fill. I would not be targeting the market going anywhere lower than that. I measure that gap fill as being to Friday's high at 67.18. Okay. But let's take a second here and let's just zoom out and give ourselves some context to understand the market. First off, just a quick reminder that they are still doing the competition here. If you go to X, LinkedIn, or Instagram, and you enter, a screenshot where you explain potential trade ideas and you use the hashtag #FreeBlueJacket, you could win up to $600 in prizes. And that's still going on until the end of this month. So if you have not been doing that yet, throwing up some trade ideas, you really should. It's not just about winning the prizes. It's a great way to gain skills as a trader. Somebody reached out to me recently and said, how is it that you have so much confidence in your read of the market? And my answer to them was, well, it's this and it's that and this other thing. But honestly, one of the biggest things that gives me so much confidence is the fact that I am discussing my trade ideas live every single day. I am discussing my analysis of the market live every single day. And so I have feedback coming from you guys, from the community, telling me, well, did you see this? What about that? Are you aware of this? What about that? And it constantly forces me to reevaluate my read of the market. That helps me grow as a trader. That helps me grow my ability to read the market and predict what comes next. Because I'm not just challenged by the results of my trading, which of course I am, like everyone else, but I'm also challenged by the community giving me feedback. This is your opportunity to do the same thing. So post those screenshots, give your trade ideas. What do you think the market is going to do, where, and why? And then get feedback from the community letting you know what they think. If any of you want to send me, a link to one of the posts that you've put and get my opinion, feel free to do that. You can email me at ahoy@piratetraders.io, or you could DM me directly in the Discord. Okay, so let's get to market analysis this morning. So I'm going to start today with the market in the monthly candlesticks. Why? Well, you might think monthly candlesticks aren't very helpful for day traders, but they are very, very good for giving us a context to understand what the market is doing. So right now, when I look at the monthly candles, what is the context that it's giving me? It's bullish. Okay. We have 1, 2, 3, 4, 5, 6 months of higher highs and higher lows. That's a trend. That's momentum. Now I know it can't last forever. If I go back and I look back in history, we don't generally go straight up for longer than 6 months, but for now we still have that momentum. And the giant wick that we've left behind on the monthly low is a sign of that momentum to the upside, which just means we could keep going up from here. That helps me to not be quite so bearish. All right, let's zoom in and we'll take a look at the weekly. When we look at the weekly, we realize that all we've really been doing for the last month is balance. Right? Now, intraday, from day to day, it was like we had one little balance area here and one little balance area here. And then we came and we pulled back and then we retraced, and it was all over the place if we were looking at day by day. But when we zoom out and get some context by looking at the weekly, we just basically have balance. The market is just going sideways. And what has it done in the past when it's had balance? It's broken higher. It had balance. It's broken higher. It had balance. Broke higher. Balance. Broke higher. So again, there's no reason to be bearish here. Okay? This market could absolutely keep going higher. What else do we recognize if we look at the weekly candles? Well, we probably made it to the balance area low last week. This is the weekly balance area, but we didn't make it to the high. So that increases the odds that that's where we're going. And that's going to be up there towards those all-time highs. Okay, so now let's zoom in even more. We'll take a look at the market on daily candles and look for some context there. Well, we can see we had a balance area in here that we broke out of. That got us momentum up. We created a balance area in here we broke out of. That gave us momentum up. And we created a balance area in here. Last week, with that Trump tweet, we broke out of that balance area and immediately rotated to the opposite end of the previous. That's normal. That's what we would expect. Once, of course, we had a very intense day, right? And overnight session that night where there was a lot of panic and a lot of fear. But what did the market do? It basically came back to backtest this previous balance and then turned around and came back up. From there, over the subsequent days, and I know it was very choppy and sideways inside of here, and we're going to talk about that, but we're just trying to give ourselves a clean context to start the day first. From there, what did the market do? It pushed its way back up into the previous balance area and then failed. It could not continue. So what did it do? Came back down again, found support again, came back up. So that tells us that this market is in balance. We talked about how we're in balance on a weekly time frame. We're also in balance on the daily. And that balance area looks like that right there. Okay. Now, is it normal to have this much balance on top of balance on top of balance? No, it's not. But we know why it happened. It happened because of the trade tensions with China. Okay. So stuff happens. You know what I mean? You can't always expect the market to function in an exact way. But the good news about this is it tells us what comes next. If we tested the balance area low and we're turned around and going up, where are we likely going? To the balance area high, which is basically the balance area low from the previous balance area. So now we have some targets to the upside. We know we have momentum. We know we have targets. Okay, great. Now let's zoom in and we'll take a look at the market profile chart. So if you're looking at my screen right now, the chart over here on the left side of the screen, this is a market profile chart, or what is called a TPO chart. It puts the time and price on the vertical axis, the time and volume on the vertical axis, so we can see at what price levels the most business is happening and at what price levels are we running out of business. Where's the market running out of steam one direction and then turning around and needing to go the other? Where is the support and resistance for the market? And then over here on the right side of the screen, this is the Bookmap chart, which is what I use to see order flow. Where are the orders that are in the order books right this minute, and how are they changing throughout the day? Okay, so we talked about a move to the balance area high, which is the old balance area low. So that's 67.54. If I'm going to be bullish today, that's where I think the market is going to go. I have no idea what is going to happen beyond that, right? Look what happened last time we got above there. We turned around and came all the way back down. That could happen again. We could poke up in there, maybe today, maybe tomorrow, and then turn around and come all the way back down to the 6,600 area. Okay? That is totally possible. So I don't know what's going to happen beyond that balance area high, but what I do know is that's the target for the market right now. As long as we have bullish momentum this morning, that's where the market wants to go. So then we bring in the gap, which we already talked about. To me, the gap is the distance between wherever the market opens this morning, which is currently, 67.35, and yesterday's high. Okay, Friday's high, which is 67.18. That is the gap. So when the market opens, we have two contradictory pieces of information to take into account. We think the market is heading up to 67.54. We have the gap up. That is telling us the market is bullish. We have buyers. We have momentum. Okay, so that tells us we should be looking for longs to get to that high that we're targeting. But what else does the gap tell us? that often first, before it makes that move it's going to make, it will come back and fill the gap. So we are not necessarily jumping into a long trade right when the opening bell rings, because this market might need to pull back 20 points before it makes its move higher. Do I really want to sit in a trade, a long trade, while the market goes down 20 points? Not at all. Okay. So maybe I'm actually thinking about going short there to target that move for 20 points. Or maybe I'm just saying, you know what? I'm bullish. I don't want to short against it, but I'm not going to go long at the high. Instead, let me go long on the gap fill. Or maybe I'm saying to myself, I want to go long, but I don't feel confident enough to just put a limit order in at Friday's high. Why don't I watch what happens with the market? And once it gets there and it gets to Friday's range, if I see the buying then, that's where I choose to go long at that moment. Okay? All of those are acceptable ways to handle the gap. Now, what are the other things that could happen? Well, we could get a gap and go. The market might just open and immediately start to go higher. That does happen. How would we know that that's what's happening? We would see support right at the overnight high. Okay, we would see new buying above 67.39. So even if we want to get long for a gap and go, we don't need to get long right away, first thing in the morning. We can wait for it to get above that overnight high, see it turn into support, then we can get long for the move. We don't have to guess that it's going to be a gap and go before the opening bell or right at it. Also, what could happen is the market could fill the gap and it doesn't find support here, right? Well, what is that telling us? It's telling us we don't have the momentum. Not right now. We can't turn around and go straight to that high that we're targeting yet. So the more time and the more volume that we spend inside yesterday's range, it is below 67.18, the more likely the market needs a pullback in price. Okay. So then we start to say to ourselves, okay, if that were to happen, if the market were to fill the gap and start to spend time and bring in volume, what are the targets to the downside if I wanted to short? Well, the first is going to be the week M period low at 67.01, and these are all back to back, but it just is what it is. So the first target is 67.01. That's repairing the weak reference we left behind. The second target is 66.99, which is a J period single print that we need to backfill. That is likely to be support. So odds are if we do come back to there, we'll get a bounce. But if it doesn't, then the test of the overnight low, which is around 66.94. Okay. So again, I know they're all, right up against each other, 67.01, 66.99, and 66.94, but those are our targets to the downside. And we don't necessarily need to assume the market is going to go any further than that unless we get more new selling there. Okay. If we get more new selling below the overnight low, then we start to think it needs a larger pullback. But as of now, there's no reason to assume that. The gap up is telling us we have buyers. That increases the odds that if we get a dip, they will buy. Maybe they will buy inside the gap up and will immediately go higher. Maybe they'll fill the gap and buy. Maybe we'll come back and repair those weak references and we'll look below that overnight low and then they'll buy. But the gap up is giving us information right out the gate, which is that there are buyers. And if they're not right here, they might be right here. And if they're not right here, they might be right here. And so we don't want to get overly bearish overly quick. We could be bearish to fill the gap. That's fine. We can be bearish with new selling inside yesterday's range to repair the weakness. That's fine. But we don't want to be bearish beyond that. In the same way, we don't want to be bullish above 67.54. So what am I basically telling you? On both sides of the market this morning, lock in profits quickly. Okay? Do not fall in love with trades. Do not assume we're going to have some massive, huge day with a 100-point range. We don't need that, either if we go up or down. This market can stay in a relatively tight range and still achieve its goal, which in my opinion is getting to 67.54. Okay? Now, to just make things even more complicated, members of the brigade, people that are in my private community that hear me talking about this stuff every day, they already understand this. But if you're new and you're listening to this for the first time, you're about to be very confused by what I'm talking about. So we talked about balance. Balance means the market is in a range. It's going sideways. Right now, that range looks like this right here. Come on. Go down to the low, come back up to the high, go down to the low, come back up to the high, right? That's the balance. But there's another way the market can bounce, which is what we call balance by pin. What that generally means is there's sort of an exact level. You can generally see it because it'll be a very large node of cumulative volume, or around a very large node of cumulative volume. Okay. There's like sort of an exact level that the market keeps getting pulled back to. And the way we can generally tell where a pin is first off, we will reverse to that level. So the market will be going one way, and then out of nowhere it reverses and it goes right back to that level, whatever it is. And then we will also see a lot of taper at that level. So a lot of 45-degree angles where the market is kind of building up steam or running out of steam. It's turning resistance into support, then it's turning support into resistance. And so if we zoom in, we can see that we have that from last week right around 67.10. Okay. We have a large cumulative node of volume. So a lot of business was done in here. We had the massive sell-off. Where did it retrace? The very next night. 67.10 is where it retraced. Where did it taper off that next day? Where did they run out of steam? Same place. Where did they do some battle the next night to try to decide which way they were going to go? That same place. So we opened the next morning all the way down here. Where did the market go the next day? Right back up to 67.10. Where did it completely run out of steam and start going sideways? Same place. Okay. Next day, where was the support? Just below 67.10. Okay. Next overnight, where was all the business? 67.10. When we came back down the day after that and crossed through it, where did the market go? All the way down to the balance area low, right? Okay. Well, what happened after we reversed? Came right back to 67.10, which is where the market ran out of steam on Friday. Okay. Look at how the volume tapers off there. Now let's look at the overnight over the weekend. Where's the support? 67.10. Okay. So over and over and over again, this one exact area has acted as a magnet for price to bring price back to it. Whenever price tries to go away, it keeps coming back. Whether it tries to go up and it comes back down, or it goes down and it comes back up, it keeps coming back to this area. Where do we have support and resistance? Where the market tries to flip and start, its momentum in the next direction, right in that exact area. So whenever we have this, we call this balance by pin. And the thing about pins is they make it a little more tricky to read balance, because the goal of the market isn't necessarily to get to the balance area high or the balance area low, which is what it normally is. Instead, what it's trying to do is get away from the pin. It's trying to break away from this pin. Okay. So that sets us up for an even more interesting opportunity this morning. The gap fill is basically getting back to the pin. Okay. So the gap fill is 67.18, but if you look at the support, probably won't be exactly at 18. It'll probably be at 12, because you can see we have those single prints right there, or sorry, that selling tail right there. So, probably if we do fill the gap, we won't bounce literally to a tick at yesterday's high. We'll come in just a little bit. 67.12 is that pin. We're calling it 67.10. So the market should, with a very high probability, fill the gap today. If it finds support right then and there, it's just telling us we're still pinned. But what if we don't fill the gap today? What if the market opens here in 10 minutes, starts to fill that gap, finds support without getting to Friday's high, without coming back to the pin, and it immediately starts to trade higher? Well, that is very, very bullish on a swing trading basis. Okay. It would be bullish intraday to head up towards 67.54, but we wouldn't be expecting it to go any further than that unless we saw new buying up there. Right. But as a swing trade, if we get a gap and go this morning with no gap fill, that is a sign that the market is ready to break away from the pin, which is absolutely possible. A lot of times when the market gets pinned like this, it has to do with the options market. Okay. It is essentially options market makers hedging their risk above or below that level that forces the market to keep coming back to it over and over, that forces the market to keep grinding at that level over and over Okay. Friday was a big options expiry. It was the October monthlies. So that means today we're both, free from a lot of the options market making that would cause a pin. And also, we're now at the very beginning of those Vana and Charm flows that are supportive flows that kind of help the market to move upward naturally. So if the market opens today and we get a gap and go without filling the gap, I will be bullish both as a day trader and as a swing trader. And as a swing trader, the target is the all-time high. Remember how we started the session. We started the session looking at that daily chart, looking at that context. And we see that, the weekly chart, that in terms of balance on the weekly, we tested the balance area low, and now we're heading for the balance area high, which is those all-time highs. So if we get a gap and go this morning, I will be bullish as a swing trader to get up to those all-time highs. Any questions on any of that from the chat? If you have not hit that thumbs up button, please do so. Those likes actually really do matter. It drives more people to the channel, which helps us all out, right? The more people that come here, the bigger we grow, the more insights we get, the better it is for everyone. Good morning to Rich. Good morning to Kiwi. He says, could we look at Bitcoin? Yes, we can. We got 7 minutes till the market opens. Let's take a quick look at the Bitcoin. Bitcoin. All right. Talk about balance, man. The corn is balancing. It is just really having a hard time keeping this momentum going to the upside. So we happen to be in the weekly chart right now. We might as well start with weekly analysis. It's really this simple. This is your balance area. You just had a look below and fail last week. So as long as you get momentum up this week, you should be heading back up towards 124. Again, not necessarily like this week, but in the weeks ahead, right? Sometimes it takes several weeks to get from one end of balance to the other. The last time we looked below and failed, it took 1, 2, 3, 4 weeks. It took a month to get up there. So that doesn't mean we're going to go straight up, but it would be bullish if we start to create momentum up this week. Let's zoom in and we'll take a look at it on the daily. See if we can get some more exact levels. So yeah, on the daily, it looks like it's heading up towards 112,600. That's going to be resistance. If you don't get resistance there, it'll be heading up to 115,600. And you'll be looking for resistance there. If you don't get it there, then you're bullish to head back up towards all-time highs. So intraday today, if I wanted to be long Bitcoin, it would be 113-ish. But I do think that this is a bounce and it's bullish. So I want to see how far up it can go. What's really important is the fact that last week, it absolutely could have and should have failed back down towards 101, but it didn't. So some strong hands stepped in and bought the dip last week. And that's a good sign that if the strong hands are in there, they're going to let it make a bit of a move before they start taking profits. If you are watching this right now from the Discord, feel free to jump into the Futures-Charles tab, and you can let me know your questions there. Dan shared a link to that blue jacket for those of you that want to enter that competition. And Trader is here. Good morning to you. Welcome. Oh, I did not send out the email today? Oh, man. Yep. It's sitting here ready to go. Just didn't push the send button. Thank you for the heads up. Okay. Trevor in the house. Good morning to you. Billy K is here. DNK in the house. Willie T. Good to see you. Abu says, what about the NQ? Let's check it out. All right, about now. NQ, my brother. Check it out now. Yeah, so I would put the NQ literally like hand in hand exactly with the ES. So it's the same story. It's in a balance area, balance by pin. Oh man, I got to sneeze. Here it comes. Ugh, sorry about that. So, it's in balance. First order business is to try to fill the gap. So to try to get back down to 25,058. If it gets there, you look for support there. If you get a bounce, you're bullish. Oh man, sorry about that. If you get a gap and go this morning, the target is 25,180, just 180, 25,180. So that is if the market immediately starts to trade higher, or if it pulls down and fills the gap and finds support and then turns around and trades higher. If you pull back down and you get below 25,058 and you start to spend time and bring in volume inside yesterday's range, well, then it starts to become bearish. Okay. And you look for a pullback to looks like you have a single print. Yeah. One single print, which is basically just the overnight low. So I'd say the overnight low, 24,958. Okay. So both markets right now are bullish to head higher today, but they both have a gap. So we don't want to go long the minute the market opens. If we want to get long, we want to first see it get above the overnight high and find support up there, or try to fill the gap and then find support on the gap fill. Because if you're going long right at the market open, even though we have momentum right at the market open, you might get squeezed if they poke down and fill the gap first. So the first order business is to try to fill the gap. Both markets. Guillermo in the house. Thank you, Debbie B. Pete the Cat is here. Good morning to you. Yokuzna, good morning to you. Welcome. All right, so for the people that are just flooding in right now, I'm going to do the whole analysis in 1 minute. Are you ready? We're in balance by a pin. So that means we don't necessarily as swing traders think the market can get much further than 67.54. But for today, that is my target to the upside. I believe the market wants to go to 67.54. First, they will have to try to fill the gap. If they fill it, we'll look for support around yesterday's high, probably somewhere in the ballpark of 67.10. If we find support, we're bullish. If we get a gap and go, we're bullish. But only bullish to get to 67.54. Beyond there, we'd have to see new buying up there to be convinced it can continue. We are still pinned as of now. So the more likely thing is that we would get up there and then come back down again. So I would not be bullish beyond that. As far as getting bearish today, if we get below the overnight low and get new selling, then we can get bearish on a longer time frame. But I would only be willing to short from the open to the previous day's high as a gap fill, or with new selling to repair the weak references around 6,700, but not beyond that. Okay, so both sides of the market, long or short, do not fall in love with trades today. Take profits quickly. The market is open and we have a gap and go. So now we're watching to see, can we bring in new buyers above the overnight high, or do we turn around and come back through the opening price? If we turn around and come back through the opening price, from there, there's a very high probability we get that gap fill. Okay. So the buyers stay up here. We're going higher. They come back through the open price. We're filling the gap. Let's see what happens. I'm also going to go ahead and switch back to 2-tick increments, as this is a relatively tight range. And I want to have a little more detail in there. And as always, we are watching Bookmap to see changes in the order flow. Okay. Changes in the order flow will give us a hint as to what's about to happen. Okay, so you might be thinking, oh my God, I have to get long. I have to get long. No, you do not. We are getting some new buying, which is bullish to see, but we also left behind a very low volume node just above the opening price. This area around 67.35 is now a magnet for the market to come back to. The cool thing is it's bullish as long as it stays above the opening price. So if this market dips back down to backfill that and doesn't cross through the open, it's a very good long trade. If it does cross through the open, it becomes a very good short trade. So on either side, you can have very little risk, but you got to wait for it to pull back to 67.35, which it will. Right now, we're getting short covering. We're taking out stops, but to bring in those new buyers, we likely need to come back to 35. Let's see what happens. I hope most of you just on your own have figured out, because it happened pretty much every day last week, that when the market is pinned, the first move is always a fake out. So I want to emphasize that I am bullish now, but only as long as we are above the opening price. We come back through that opening price, we are likely heading lower towards 67.24 and then 67.18. Okay, you guys know how I like to use the stops and icebergs setting. When the market has momentum in a certain direction, like this morning, it opens and just like boo, 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 and it just goes straight up. As long as you keep taking out stops, it's going to keep going up. Okay? At some point, it'll make a high and it won't take out a bunch of stops. That's when it's ready to turn around and come back down. The last high, there was stops. So it's probably going to make another poke at it. But that's not necessarily bullish. That's just shorts covering. We need new buyers to get bullish. I'm very interested to see what happens when this node of liquidity disappears up here at 67.50, because that disappearing might be the thing that gives us that pullback. Jad's in the house. Good morning to you. RP says, but I don't want to miss the move. Well, everybody has to figure out what time frame they operate best on. Okay? If you're a scalper, you can go long, right? You can go long purely because you know you're likely to try to poke 67.50. But if you're a day trader, there's no reason to feel a need to go long right now. That would be what we call FOMO. That would be what we call chasing price. We know at some point today, the market has a very high probability it's coming back to 67.35. So even if we want to get long, we'd rather wait for that dip. But it's all time frame. And some people really do operate better as scalpers. You know, just take those quick trades. 2 points, 5 points, 3 points, you know, just over and over and over. Grab those little trades. And if that's what you do and that's what you're good at, then more power to you. I don't hold that against anyone. But I will just say some people think they're good at that and they aren't. They just like the adrenaline rush of it. They just like the excitement of being able to take a trade. Because each one of those trades they take, they get a little bit of dopamine feed to the brain. And so if you're chasing that dopamine, and that's why you're scalping, you may want to rethink it. But if you just really have a natural skill, inclination towards scalping, then by all means. scalp away. To me as a day trader, this right here is a delicious opportunity. I love it because I can get long with just a couple of points of risk, right? Let's say I were to get long at 67.35 and put my stop below the opening price, right? I don't have to risk very much, even the overnight high. If I were to get long there, I don't have to risk very much. And as I said, if we come back through the opening price now, we'll probably fill the gap. So even if I get stopped out of a long, and let's say I lose 4 points, I have plenty of money to make on a short to fill the gap that will pay for the losses from the long. So I can just tell myself, Charles, that is such a delicious opportunity. You don't need to FOMO in at the high. Let them do their thing. Let them, get everyone long and then come back down and squeeze them, because that's where the opportunity, where it is low risk to large reward, that's where it exists, is down there near the opening price. Okay, what was different about the high that we just made there in the A period? No large stops taken out up there. So that tells us the market is running out of steam. That was short covering that got us here. We need new buying. We need support up here if we want to keep it going. Let's see if we get that. RK say long was right at the open. Well, you guys know how I feel about that. It's an option, but how you choose where to take profits is very tricky because it's coming back for 67.35 at some point. So if you went long right at the open, did you just lock in profits right now? Will you wish you had? Or do you have a higher target that you're aiming for? Mang says you really got to make a Trump indicator, like an indicator that just warns you every time he tweets something. I think you'd probably go nuts. That thing would be going off so often. Listen, the market loves to flush. It loves to make everybody bullish, dance around the all-time high for a week, get a ton of people long, and then tank. And it could have been Trump or it could have been anything. If it wasn't Trump, it would have been something someone from the Fed said, or it would have been, something that some CEO from some company said in an earnings call or whatever. There's always something. But yes, it tends to happen real fast from a Trump tweet. Okay, so at this moment, we are getting some new buying up here at the high, which is a little bit bullish to see. So I'm back to looking at the ticks now to see, is it enough new buyers to keep this going, or do we need a dip? And the ticks are telling me we need a dip. There's still overnight longs that haven't taken profits, so we got to squeeze them. It's more new longs right there. Someone's FOMOing in. Okay, so this is new buying that should be able to get us to 67.54, but not beyond it. I'm looking for the market to run out of steam just above 54. You got short covering, you got FOMO buying, so they got momentum. They can keep it going. But I don't think they're going to keep it going all day. Guillermo says, right now, what is the probability of the ES getting to support at 67.45 versus going back up to the opening price? Oh, man. Yeah, I would say right now at this moment, the support is there to keep going. But again, I don't think it's going to be there all day. That's the thing about the low volume node. Just because we create a low volume node doesn't mean we have to immediately come back to it like in the next 5 minutes. But mark my words, at some point today, we're coming back for this opening price. Okay. So how do we handle that? Well, we ask the question, what is the momentum? Obviously right now the momentum is up, right? Why? Well, we have shorts that are covering. We can see these large sets of stops are being taken out. Those stops are people that were short being forced to go long to get out of their shorts. And then we have some FOMO buying, right? So great. If you have short covering and FOMO buying, you have momentum. So right now, over the next 5 minutes, over the next 10 minutes, it's likely to go higher, right? Because we have that combination of momentum. But is it going to keep going higher all day? Are we going to all-time highs from here? Absolutely not. Before we get to the all-time high, we're coming back for the opening price. So this is what I was talking about with time frames. If you're a scalper, go long right now. You have momentum. You can get a move 3 points up or 5 points up. But if you're a day trader, wait for the dip. Now you're saying to me, well, Charles, if I'm a day trader, can't I just start shorting right now? Right? Like get short knowing that at some point we're coming back for 35. Well, no, because we don't fight momentum, right? Short covering plus FOMO buying can sometimes shock you how far they can push it. Now, you don't want to be predicting that it's going to go very, very far, but you don't want to be fighting it either. So to me, if you're a scalper, you're going long right now for a move about 5 points higher. If you're a day trader, you're waiting for that dip back towards the opening price. You may not get there. You may find support at the overnight high, but you do need that dip. This is just short covering and FOMO buying. At some point, you need to bring in strong hand buyers, right? Somewhere in the world, there is somebody who was flat. They saw the market open with a gap up this morning. They want to get long, but they are too disciplined to chase price up. They're going to wait for a big dip. Then they're going to get long. They were probably waiting for a dip to fill the gap earlier. You know, if we were talking 20 minutes ago, they were thinking they'll get long in here inside yesterday's range. Well, now with this FOMO and short covering, they're maybe saying, well, I won't get a chance to buy here. Let me buy here. You see what I'm saying? So it's all a matter of time frame. If you're a scalper, you're going long right now because over the next 5 minutes, you're probably going to have momentum up. But if you're a day trader, you want to be getting long with those strong hand buyers, those buyers who are disciplined. They wait for a dip to go long. So then the question is, where will it dip? And brother, that low volume node is a great place for it to go, looking for a dip. And as I said, if you got long there, you'd only have to risk a couple of points because if it comes back through the opening price, you're squeezing all these FOMO longs and then boop, boop, you fill the gap just like that. So it's just a matter of time frame. And if you're a day trader and you're feeling frustrated, like, oh my God, I missed the move, chill out, bro. Remind yourself we're less than 30 minutes into the day. There will be lots and lots of opportunities. No reason to FOMO first thing, you know? Green Emerald Fog says, I'm really hoping for it to go back to the open. Well, if you're short, get out of your trade. As I said, you've got, momentum up. You don't want to be fighting it. But if you're waiting to get long, don't worry. There'll be plenty of opportunity. Mado says the iceberg subchart indicates that it catches the sellers. Yeah, actually, I can probably stretch that out slightly. Yeah, I'm not really using that subchart that much. It does show that, when the stops are going up versus when they're going down, when the icebergs are going up versus when they're going down. But I like just visually, I prefer to see it on the price axis, see where that's happening. So, for example, we talked about you poke up, you take out a large number of stops. You're likely to try to poke again because you were able to take out stops. But if you don't take out a bunch on the next poke, that's when you need a dip, right? So that to me is more valuable than necessarily looking for like reversals in here. They do happen at the same time, but this one's just easier for me to read personally. King says, would love to see more NQ. Well, let's do it for you. Yeah, NQ is bullish. Yeah, see, but they got a weak low as well. Okay, so same thing. Exactly. Man, the NQ and the ES have just been hand in hand the last few days. So the NQ is bullish. They pushed above this high over here, which is what we would call the balance area high. Okay. They pushed above that. And since they got above there, they've been spending time and bringing in volume. So that is bullish that the market is likely to keep going. But you have a low volume node in the exact same place as the ES, right above the opening price. And the opening price itself is weak. So that means there's a magnet down here. So for now, again, this is all a matter of time frame. For now, it's bullish, right? As long as you're above 25,177, you're going to keep finding support and you're going to keep poking higher. But if you come back through, you're very likely to come back to that open. So the buyers want to stay above 25,177 on the NQ right now. And if that breaks, look for a little liquidation to the open. But it's bullish. It's a bull market, So I would now, what I just said about the NQ, I'd say the same thing about the ES at the halfback, 67.44. If they can turn that into support and hold it, then they can just keep going. But if that fails, they're coming back down towards that opening price. So can they hold 67.44 on the ES? This is all a matter of the auction process, right? The market goes up if there's more buyers. The market goes down if there's not. It's that simple. How did we get up here? We got short covering. We squeezed a bunch of sellers from last week that gave up on their trades. How did we get from here to here? FOMO buying. We convinced people that got so excited because they saw the market move so fast first thing in the morning, they had to get long at the high. What's happening now? Well, now we're dipping. Now we're saying, are there stronger hand buyers that want to buy up here? And if they don't, we come right back down. Why? Because that's when we start to squeeze the FOMO longs. They got long right here, but they didn't take profits yet. So they're freaking out now and they're getting ready to get squeezed. So the ES has to hold 67.44 or all the longs from up here start to get squeezed and boop, 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 boop. We come right back down to the open. Let's see what happens. We always want to put it in the context of what is the current business, right? But what got us here? And I know it sounds like I'm saying two opposites at the same time. FOMO plus short covering is momentum. It'll shock you how far it can go. But at the same time, it can only go so far. And how do we know? When that support level breaks. That's when we know, okay, it's over. They're going to get squeezed. And that for me is 67.44 on the ES and, 25.189 on the NQ. So if we just look at the stops and icebergs indicator here, you can see this happening. So right here, you took out 109 stops. Who on earth got stopped out up there? Somebody that FOMO'd in right here. And then it came back down and it stopped them out, right? Then we dipped a little further. You got 119 stops right here. Who was that? Somebody that went long up here and just got stopped out. You see how that works? They chase price on the way up, and then if it comes back down, it stops them out. So if we come back through 44, there's a lot more stops to be taken out. But as long as we're above it, it can just keep going. Bookmap going a little dark here, so I assume we have some news coming out. Expect a little volatility based on that. We also know there's some sort of larger bot in play. We were talking about this on Friday as well. The fact that these large liquidity nodes stayed here even after the rest of the market went dark means those are not your regular day trading, like high frequency bots. That's something else. That's more likely an options market maker hedging. There's not really anything I could take away from that. It doesn't mean it's more likely it goes up or down, but it's just a behavior to be aware of. So if you look at from right here, do you see how a bunch of the liquidity just instantly disappeared? It's like a straight line. And then right here, it instantly came back. That was the high frequency bots, the day trading bots turning off for a minute to react to the news. And now they're back on. So whatever it was, it didn't matter. Trader says your 54 worked as resistance. Thank you, sir. Keep the compliments coming. You know I like them. Guillermo says, yeah, intraday traders, just chill out. I'm telling you, it's great advice. We have not successfully broken away from the pin yet, although this would be a start. If we can keep the momentum going today, basically we don't come back through the open, we stay above it, then we've broken away from the pin. But until then, this market is still pinned. And you know what that means. Let me see if there's any final questions I can plow through real quick. David says, first time here, are you on the daily or mornings only? Yeah, so I live stream every single morning from 9:30 a.m. to 10:30 a.m. On my own channel, which is Pirate Traders. You can, if you just go to the link at the top of the screen, piratetraders.io/join, you can sign up for that. It's $20 a month. I only live stream for Bookmap on Monday mornings. So these public live streams are just available on Mondays. But if you want to hang out every day, join the brigade. We'd love to have you. Someone is saying, I'm out of my buy. I think that was a great choice. It's a good spot to take profits. Although now that we have a poor high, it looks like we need one more poke to the upside before this thing comes crashing back down. Another person asking if I stream every day. Yeah, just check out the link in the description at the top of the page. piratetraders.io is the website, and you can sign up through there. Hustler Forever says, I'm watching for a break of 47, then reset for potential short. Break of 47 short. Yeah, I would say 44 instead of 47, but that's fine. You know what I mean? Like I said, you got support right now. You got FOMO buying, but man, if it comes back down through 44, they're not going to want to be long anymore. And then you're just going to get boop, 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 a liquidation straight down. It's liquid. Green Energy says that the NQ is pushing strong. Yeah, both are pushing right now. That poor high on the ES means we have one more push to the upside. Marg says, I shorted Tesla. I wish the market would just go down and stay there. Like I tell my husband every night. Oh! I read that one live. Oh, sing. Get down there and stay there. Your husband has some work to do. Let's take a quick look at Tesla. No, not a good short on Tesla, I'm afraid. So Tesla just broke out of last week's balance area. So I would just draw this box right here. And I would say if it comes back down and it finds support there, that's actually a long trade for continuation higher. If it comes through there, that's the short to the opposite end. But getting short up here, you're guessing. You're guessing that it's going to reverse. You have no statistical probability of that right now, right? There's no market generated information telling you to get short here. Technically, if you were to get short around 453, you could say, you know, you're selling previous resistance. But even still, in terms of balance and excess, which is what we're focused on, right? The auction process, are there buyers, are there sellers? This morning, Tesla has buyers. So you're fighting those buyers, right? And those buyers are in control. As long as you're above 440, those buyers are in control. So do you really want to be fighting them when they're in control? Probably not. Now, if they come back through 440, right, there's your balance area. If they come back down and they cross there, well, guess who takes charge of the market? The sellers. So if you were to go short there, your probability of success would be much higher because you'd be going with the side that's in control. Right now, you're trying to fight the side that's in control. Food for thought. Okay. We're still going. Let's take a look at the ticks, see if they held that zero line. They did. So this is real buying. So earlier this morning, we talked about the fact that, the market was likely heading to 67.54, but I would not be willing to assume it's going to keep going unless I saw new buying above there. This is that moment. Okay. So now that we're above 54, and now I'm talking about for the rest of the day, like for today's market, that's our deal or no deal level. As long as they stay above there, they're going to continue higher. They come back through, they need a dip. So can they hold 67.54? And I don't mean literally to a tick. Okay. I just mean this general area. So you could even say anything above 67.50. If they can hold that support, they can keep going towards the all-time high. That would be a sign we've broken away from that pin. But if they can't stay up here, what happened the last time? I was here on this day. It felt really bullish up here. It felt like we were going straight to the moon. But then what happened was we couldn't stay up here. So what did the market do? It pulled back in. What was the reaction after we pulled back in? A 200-point move to the downside. Okay? As crazy as it might feel right now, that could happen again. The market could fail and pull back in and go 200 points lower. So right now, to stay bullish up here and assume that we're heading for that all-time high, we got to see new buying up here for the rest of the day. More buying, more buying, more buying, more buying, more buying. They really got to fight hard to stay up here because all it will take is one little dip and this thing completely reverses and starts heading the other direction. We also talked about this pin. This pin was likely because of the options that expired on Friday. So now that those options are expired, now that we're getting those Vana and Charm flows, maybe we're ready to break away. Maybe we're ready to go to all-time highs. But now it is to break away. We got to stay above 67.54. The market did the first thing it had to do, which was a gap and go. Fantastic. High five market. Now the thing is stay above 54. So I would describe myself as bullish, but cautiously so. And I'd be keeping a close eye on the ticks. Right now, they're holding the zero line, which is telling us we are bringing in new buyers. As the market is moving higher, people are buying and buying and buying. Okay? So that's great. But if those ticks start to head lower, well, then they're done buying and they're all fixing to get squeezed. I also don't want you to lose track of that low volume node. Okay. Whenever the momentum is over, which it now looks like probably won't be in the next 30 minutes to, hour or so, but whenever it's over, they will likely come back for 67.35 intraday. If they don't come back intraday, it doesn't matter. So bullish, but cautiously so. Thank you guys very, very much. I hope you got some great insights and had a little fun today. If you did, you might consider joining the brigade. It's $20 a month. And I hear you. That's a whole 2 ticks on the ES that you would have to trade to pay for it. But I have a feeling if you were listening to me give my take on the market every single day, within a month, I will say something that will either get you in a trade to win 2 ticks or get you to avoid a trade where you would lose 2 ticks. And then the membership pays for itself. And the other perks, which is like getting to be part of an awesome community, that's free at that point. So you might consider joining the brigade. Again, piratetraders.io/join. We'd love to have you. If you are a member of the brigade, head on over to the private stream and I will see you there in about 2 minutes. And if you're not, farewell. We'll see you next